Good morning and happy Wednesday, folks. Hope everyone is doing well. Welcome to the Game Plan. My name is Gareth, Soloway, Chief Market Strategist here at VerifiedInvesting.com. So listen, the last couple days I've been saying, all right, listen, it's time to start buying into some of these plays. They've gotten discounted enough where it looks like they're into support and should bounce. This morning, CPI may have just given us the green light for a rally across the board. We'll see if it holds, but right now CPI came in lower than expected, and the markets so far are moving higher, especially technology. Tesla's having a big bounce. We're seeing other names out there I'm going to go over that are in rally mode. All right, follow me over here, folks. Just fighting that little leftover bit of a cough here. But what we have here is the CPI data that has come out, right? So this is the S&P behind it. So you can see, again, we've rallied into the number and then continuation to the upside. But today's CPI month over month came in at 0.2%. 0.2% was less than the 0.3% expected, all right? Then the year over year down here, 2.8% versus 2.9% expected. So this is just what the doctor ordered for the markets. Now you might say, well, why? Well, because people are so concerned about tariffs increasing inflation. Any sort of downtick in inflation is a net positive in the short term. Also, if inflation can start to go down, and by the way, I'm not necessarily convinced it's going to go down, but if it does, or people think it is, then you know what? The Fed can be open to lowering rates sooner, and that opens the door to obviously cheaper money. Now, again, this is all hopes and dreams of investors. It's not to say that's going to be how it plays out, but all you need when the market is beaten up like this is a little hope, and the buyers will come back. The buy the dippers will come back. All right. So here we have, again, the S&P. This was yesterday, so a lot of choppiness. We even had a very good rally late in the day. And if you were on the game plan yesterday, you remember that I said, hey, listen, we might see an early day sell-off with kind of a late day pop in the markets. That's kind of what ended up happening. So that was nice, although we did retrace a little bit as there was some profit taking going into the CPI data this morning. Now, this was yesterday after hours. This was 4 in the morning on. And again, here's that CPI pop. You can see initially we popped all the way up there. We did come back in, but we are trending neutral to positive. We'll have to watch and see if we hold the gains and add to the gains. Now, this is what I was talking about. We have the waterfall event in the markets. The markets take the stairs up, and then fear is more pervasive, so the bigger fall comes in when people get worried. Now, again, the question is, well, why did the markets stop going down here? I want to show you a few cool, very interesting things on why the market may have completed a short-term level here. And again, there's not really, I mean, you have a little bit of a level here above it, but for the most part, there's not a whole lot in this range until you look a little bit deeper, okay? Now, again, I want to be clear. My thought process is this, is that we're probably due for a bounce. Maybe, at best, we get back to the scene of the crime. That would be the best case scenario. But regardless of whether we go up here or here, eventually we're going lower, folks, all right? There's no doubt the consumer is really struggling. Even big and high-end retailers are now saying this. We've heard from Walmart. They lowered guidance. I mean, across the board, almost every retail outfit is lowering guidance, and that is telling us the consumer is pulling back, and that, again, is going to weaken the economy. Remember, here in the U.S., the driving force of the U.S. economy is consumer spending. It has been, and that's the great thing about the economy here, but it's also the downfall if it ever stalls out. All right, so let's go back to the computer. So on this, if we take a look at the drop on the S&P, you might say, well, again, this kind of low, the low is right in here. Well, there's a little bit of a level there, but more importantly, look at this. Look at this interesting factor here. If we look at the August decline, and we take the high of the August decline to the low of the August decline, it was just about 10%. If we take that distance, look at the measured move on the same decline. We have virtually did the same decline on the SPY as we did in the August correction. So you have some symmetry there that then points to maybe a short-term bounce. Now, here we had the markets go to new all-time highs. I personally am not in the camp that that's going to happen in this situation. Another interesting little factor that I thought was unique was that if we look at this high here, which was the high from December, and we went slightly higher in January, right, or in February to make a new all-time high, and then we bring a parallel down, let's just drag that back and just see where it goes. And lo and behold, look at this, guys. This is just kind of one of those cool things, is that this high to this high, dropping that parallel down here, it brings it to this low and the low from yesterday, all right? And again, we'll have to see where the markets go. If we look, we are just creeping little by little higher here in the pre-market, so markets are setting up to have a gain. The question again is, does it last? Based on what I'm seeing here, the mimicked move from August, the decline to this decline and this parallel, it does, for me at least, tell me there's a bounce probably coming. Again, this low would be short-term resistance at 575 on the SPY, and then also this trend line, a retrace to the scene of the crime. The 10-year yield today catching a little bit of a bounce. Again, a small uptick there on the 10-year. We'll see if that lasts as well. But let's turn our attention to Tesla. All right, sorry. Tesla is one of the plays that I picked up in my swing trade service with members. We were in at an average price of $229 and change, and I'm holding this, and I'm going to tell you why. If you flip to the daily chart, this is a chart I showed you guys already. Look at this. All right, now I'm going to go back to the big board here and discuss this, but really what we have on this front is that, again, we had this big move up. Most of this was election related, right? So here was the election right here. So you're already off of this area down here, but we had this big move up and then this full retrace back down. And you can see the last move was the most dramatic right here. That's kind of the flush out. We call that the weak hands really being kind of annihilated and panicking and dumping. But you come into this area right here, this gap fill. It also happens to be a 786 Fibonacci retrace. The stock is obviously ridiculously oversold. There's so much negative sentiment out there about the stock, about Elon Musk. For me, those are all signals where I say, this is starting to get more interesting. Maybe I should look to buy, especially when you have the technicals there. And again, I did talk about being, slowly accumulating the stock in the previous game plans. All right, so keep that on your radar, folks. There's no doubt about it. That one, again, I still think goes higher. The question would be is how high do I think it goes? I mean, at minimum, 263 here, there's a gap fill. But in reality, this is where you start saying, okay, well, what's a Fibonacci retrace? If we take the high, the all-time high to the recent low, now you're talking a 382 is kind of my base case here, which actually, interestingly enough, this low, and then this low is right in that vicinity, and that's all the way back to 320. Is it possible? I don't know. We're going to find out, but it's certainly, at least for now, I am in the trade. I will tell you this, will I be patient enough to let it go back to 320 before I unload with members? Probably not, but I am looking for higher levels than here. Another stock here, we have this AppLovin, APP, was a $525 stock. Comes down to basically 235. We got in at 245 in the service. I actually already unloaded this morning at 280. We took about a 15% gain on it. And you can see, again, this thing is now at 288. So it just continues to rip. But these are the types of charts that I love. All right. Massive drop. That, again, the key is, and again, when you look at Tesla, when you look at some of these other ones, Robinhood, we're going to go over, these are stocks that they don't necessarily have any fundamental issues with the company. It's just panic dumping by retail, and they're getting to levels where it makes sense. And then if you look at this, and I love my confirming Fibonacci, look at the low. The low the last 2 days, perfect 618. From the beginning of the bull move here in August of 2024, all right, that whole move up, the Fibonacci retrace, it's now done a 618 before yesterday's bounce. And again, as I mentioned, this one I did close out. Always good to take some profits off the table, in my opinion. And again, that's what we did here. Now, if you look at this chart here of Robinhood, Robinhood on earnings ran to almost 67, down to 35 and change. Look at the pivot low, and then do your fibs off your August low. And lo and behold, you basically came into your 618 as well, right there. And again, these are all signals that have me kind of saying, listen, I don't know, and I'm not going to pretend to know the exact low on any stock. All I can do is look at factors, and these factors in the charts will guide me to probabilities. And when the probabilities are high, when everyone else is panicking, like the last few trading days, you really saw people getting nervous. And I started to notice that people that normally don't talk about the markets, they were coming to me and saying, hey, mate, what's going on? What's going on here? Those are signals to me. On a psychological basis, those alarm bells go off in my head that there's fear amongst retail, which then means the markets are getting close to a bouncing level. Then match up the technicals and probability, again, put it on your side, and you're in good shape for some potential gains here on some longs. Another one of my favorites here, guys, this one right here. Constellation Energy was one of the high runners on the data center, nuclear, kind of all that kind of stuff. The stock drops from $330 down to a low of around $196 in a straight line. what should happen here? Should it bounce? Well, yeah, support, and then look at this upsloping trend line right here, right into that level, and it bounced yesterday, and look at it today, already back to 218 almost here in the pre-market. All right, so again, very, very nice stuff. Now, the big question for me is on the bigger charts, like an NVIDIA, are we going to rally back to the scene of the crime and then get rejected? And that's going to be the next test for this market, is that you have this head and shoulders on NVIDIA. You have a lot of big breakdowns on the S&P. If we go back to the S&P, this up-sloping wedge pattern, you know, this line here and this line here, we've broken. And that's a major break going back to 2023. So, I mean, this isn't like a short-term breakdown. This was a major breakdown. And so the bounces should be big, but unless we recapture this line, bounces are sell the news events or sell the rips versus buy the dips. And that's really, really important here. All right, so again, we'll continue to monitor this chart, but let's flip over to Bitcoin now and take a look. In fact, what I'll do is I'll go over to the big board for Bitcoin. Let's follow me over here, and we'll see again that we're still stuck between two levels. We have our support down here and our resistance up here. And remember, one of the things we talked about is that this is the same sort of thing right here. Okay, so when we were up here, I said the same thing. Like when we were trading in here, I was like, okay, well, here's support, here's resistance. All you care about is which way it breaks. It broke, collapsed, bounced, retraced. Now it's backing down, bouncing a little bit. But ultimately, on this, support needs to be tested, and I'm still adamant about that, even though I am long some cryptos. I'm not long Bitcoin. For some reason, someone commented yesterday, oh, I thought you said you weren't going, and I did not say I'm long Bitcoin, guys. Please understand that. I went long certain altcoins, Ethereum, and a few others because they've been beaten down much, much more, and I'm looking for a bounce on some of those. But the point being here is if we trade up here, this is resistance. If we trade down here, this is support. And anything in between is just a lot of noise until we get either a break with confirmation above here or a break to the downside and confirmation below. All right, so again, keep that on your radar. The other thing that's kind of fascinating to me is, see these three lines? Now, would it be interesting to you to know that this line is exactly equidistant or right in the middle of this line and this line? And listen, I drew these lines on without even knowing that, and just I think like a week ago, I was looking at this and I said, man, that almost looks exactly in the center. And if you do a measurement from here to here and from here down to here, it's literally smack in the middle. That's the beauty of the symmetry of these charts. Like, and again, there's no one sitting here in the charts like manipulating and being like, oh, I'm like, you know, I'm Satoshi Nakamoto, right? I'm going to make sure that this chart lines up perfectly with this line in here. This is all subconscious psychology. And I think it's important for us to realize is that, you know, we may not even be aware, but our brains, when we're trading things, naturally come to pivot points that happen to have. And that's why, by the way, the Fibonacci sequence works so well. It's a naturally occurring sequence that is in nature, like the petals on a flower, the rings on a tree. They're in a Fibonacci sequence. And we are part of nature. Let's be fair, right? That is part of us. And for some reason, it plays out in the charts. It's really remarkable stuff. All right. Couple other charts here to go over on this Wednesday as we see a market that is looking like it wants to start the day with a rally. Gold today, a little bit of an upside move there, basically flat so far. We're still watching this trend line and this trend line for our next obvious move. A breakout here sends us up here, and a breakdown sends us down into this level here. Now, if we look at oil, I have been calling for a bounce in oil. We're getting a little bit of a bounce here. Again, I think maybe max we go back to about $70 per barrel right up here. And then I could look for that next big move down. I am not long oil, so don't get that confused. Again, I only go long when I have a big enough reward, and I don't think this is a big enough reward off of this support. So again, for some people it might be. For me, it's not. Just that simple, right? We're all our individual investors and traders. Here's your natural gas chart. The topping tail is playing out like a gem so far as I continue to be short nat gas in the service, commodity service. And again, down it comes here. We're looking at a test of this line as being the first big test. If this breaks, it gets a bigger move to the downside. But this is going to be your first big test on natural gas as it comes down here. All right, flipping back to the SPY, guys, let's go to the pre-market. Pre-market's coming in just a little bit since I began this game plan. So this will be interesting. And I will say this, folks. If by chance the markets cannot have an update today, let's say for some reason, even with the CPI coming out better, we somehow end lower, that would be very damaging to the psychology of the market. And I think it opens the door to a bigger straight down correction. So again, let me repeat this. The key to the market bouncing is today, meaning that if we have, again, a flat or down day today, this sets us up for essentially a throw the baby out with a bathwater type moment where we could flush another 5% or more on the markets. If we can get any sort of bounce today, I think it gives a reprieve. It coaxes some buyers in. The charts, again, are confirming that that's the likely outcome. But again, it would do a lot of damage if somehow the markets ended negative today after a better than expected CPI data print. All right, I will be back for trading the close so we can go over the data by the end of the day. That's 3:55 p.m. Eastern time. I hope to see you all there. Thank you guys for supporting us here at Verified Investing. I'll talk to you then. Take care.